Hey guys, good morning. Got my Barry hat on, got my trusted assistant hard at work, and we're talking about interest rates. So a lot of misconception out there, a lot of questions, a lot of just straight up bad information about what rates are doing right now. Rates are definitely going up. There's no doubt about that. But you got to keep in mind they're going up from like 2.5%. So rates at 5% are still historically pretty awesome. So let's keep that in mind. But that being said, people are a little freaked out about the way that rates have gone up and how quickly they've gone up. Compared to where they were for the last couple of years. And so we're in this weird point in time where you've got about half the people out there that are well informed. They know what's going on, all is good. The other half, not the case. The other half still think that we're in 2020. They still think that rates are at 2.5%, 3%. And when we offer them a 4.5% or 5% rate, they go running like they're on fire. So I wanted to clarify in an easier to understand context how interest rates work from the lending standpoint. Because I think that a lot of people go into talk to a loan officer or a mortgage company or whatever, and they think that that lender is just saying, hey, here's today's rate, 5%, take it or leave it, right? And that's not how it works. It's not like you're buying a product at a store or like a physical good, right? And so it's always on a sliding scale. And so what I want to understand explain is what a par rate is and how that sliding scale works. So a par rate is a rate that doesn't cost me anything and doesn't cost you as a buyer anything. It's just the rate that you're qualified for based on your credit score, your loan type, the city and state that you're in, the county, even the number of stories in the house that you want to buy plays a role in your interest rate, believe it or not, the property type. So all those different things come together to create, the rate. And so let's say that you're qualified for a flat 5% rate, 5.00. This is the par rate. Again, doesn't cost me anything, doesn't cost you anything. It's just what you're qualified for. But you talk to your parents and you're like, hey, mom and dad, I'm getting a 5% rate. What do you think? And they say, you need to get a 4.5% rate because that just sounds better. All right, we have no idea what it means, but it sounds great, right? So 4.5% rate. You can absolutely 100% get a 4.5% rate. But if this is the par rate, anything priced below this is priced at a discount, which means that it's costing us more as the lender to offer you that lower rate because that's lower than what the market is offering. So it costs us money to offer a lower rate, which then gets passed on to you in the form of a discount point. So that's where a buy down comes from. That's where you're actually paying to obtain a lower interest rate. Now, the opposite applies as well. If for some reason you want to take a higher rate, you can go above that par rate. So let's say you're qualified for the 5% rate, you're going to go up to 5.5%. You can do that as well. Not sure why you would, but you could, because what happens is now it's priced at a premium, and that premium means additional revenue for us as the lender. And what we do with that revenue is we take it and we turn it around and we credit it back to you. And so when you're talking to lenders or when you're talking to me or whoever, you have to understand that the rate is the rate, but there's always that sliding scale to fit whatever needs you have. And so that's a conversation that you have to have. And I think a lot of buyers miss out on opportunities when they don't have this conversation. Because you may find that buying the rate down to 4.75, just as an example, maybe only costs you $500 and you recoup it in just a few months. Who knows? There's all kinds of different ways that we can have that conversation to best fit your needs. And so don't miss out on having that conversation and don't make the assumption that the rate that you're being offered is better or worse than something else that you're seeing, because it's very possible that it's not the case. Just a conversation to have and to make sure that we're structuring your mortgage loan to fit your needs the best that we can. But if you have any questions, give me a call. I'll be around forever. Bye.